Africa-focused Afentra has been readmitted to the London stock market with new assets in Angola. The chief executive is oil veteran Paul McDade, who joins us now here in the studio. Paul, welcome. It's a pleasure to be able to catch up with you. First of all, explain more about the circumstances that led us to this point now with this suspension and the readmission document.
Yeah, well, thanks for giving me the opportunity. Afentra was formed just over a year ago. It was a reverse. We moved into a company that was originally Sterling Energy, listed on AIM. We took control of that company and used it as our vehicle to then rebrand and build Afentra and really pursue the Afentra strategy. So that's where it started just over a year ago. We obviously, the strategy of Afentra is pursuing production assets in Africa. I have a long experience there, as well as in the industry. So that was what we were pursuing as Afentra. And recently we announced the signature of some SPAs on some assets in Angola. But the suspension started last October because Sonangol, who we're buying the assets from, or one of the assets, Sonangol were trying to run a very transparent process, so announced who all the bidders were. And AIM determined that this could lead to a reverse takeover, so therefore asked that it will enforce the suspension of the shares, unfortunately, way back last October. So it's been quite a time, we wish it had been shorter, but the progress to get the SPAs done, we did that in April, and then move on and do the documentation for the admission, just takes a certain amount of time. So very happy to have some patient shareholders who hopefully have been now rewarded for their patience.
Okay, let's pick up on that point about shareholder value. The stock was up 70% on its first day of trade yesterday, and as of the time of this interview, it's up a further 7 or 8% or so on the session so far today. This is all based on this idea that there's value accretive in Angola. And now, previously, in your one of your prior positions as being head of Tullow Oil, you were in West Africa, but not particularly Angola. What do you see in Angola as an opportunity to deliver shareholder value?
Yeah, it's really interesting because when we started last year, if you'd asked me that question, clearly Angola had to play a part. It and Nigeria make up probably 70% of the reserves in West Africa and production thereabouts. So definitely we've been on our radar screen. When we visited there earlier this year to talk about this potential deal, what really positively surprised me was their enthusiasm for the investment from a company as small as Afentra is. My previous experience with Angola was probably correct. It was very focused on the major IOCs. They were the ones doing the big developments and have been doing for decades. I think the Angolans are looking ahead and saying these majors they're rearranging their portfolios given the energy transition. Some of these assets are maturing now, not necessarily attractive to the majors. So who's going to fill that void? And I think they're really they see that challenge and therefore see the need for smaller companies like Afentra to come in and invest in those assets and move those assets forward. And this transition from the majors to the smaller, I mean, this is a transition that will take decades, not just a few years, and as we've seen in the North Sea.
Let's talk a little bit about some of the financing behind all this. And I think the market cap of the company is around about 60-70 million, I think, as of this time of this interview. And as I said, you had that 70% rise yesterday. How have you structured the purchase of the assets, and what do you see as the longer term delivery for shareholders that have, in your words, stayed with you?
Yeah, so when we did the initial move into Sterling Energy, the attraction was there was a small company there with one asset that's fully carried, so no liabilities associated with that asset. It had close to $35-40 million on the balance sheet and was very clean. So we were able to move in and use that as a vehicle. So starting off with a reasonable balance sheet. These transactions, the way we will finance them is a combination of, we announced on Wednesday an RBL and working capital facility that we've agreed with Trafigura, the trading company. They'll be doing our trading and they're providing us with the debt portion of the acquisition. We will use some funds from our balance sheet. And then, of course, these assets are producing. They're producing cash flow, and they have an effective date, which is historical, September in the case of one in April. So when we complete in fourth quarter this year, those assets will have generated revenue, which contributes to the purchase price.
So all that gets ploughed back into the company to do what with? What's your longer term plan?
Yeah, so at completion, you know, as I say, we will take on, it'll probably be around $50–60 million of debt. These assets produce around about $35 million of cash flow at $75 a barrel. So clearly they're delivering net to Afentra. So we feel that, you know, they're very value accretive. I think that's reflected in the share price movements since the resumption of trading. And really we'll use that now as the kind of first, let's say, foundation stone for the building of Afentra. I mean, the overall objective we set out over a year ago was to build a material African-focused oil and gas independent. And you know, that means that we're going to build, I see this as the first step of many future acquisitions.
Just in Angola, or do you have aspirations to go elsewhere? Again, going back to your previous experience, you had experience in other African nations, West Africa particularly. Do you see opportunities outside of Angola, or is that going to be your specialism?
No, I mean, the focus stays as it was when we started the company. We had a very clear geographical focus and a very clear strategy on the type of assets, and they remain the same. In fact, on Wednesday I presented the kind of founding principles of the company that we presented over a year ago, and they're more relevant and they stand today. So we're sticking with the strategy. The strategy is focused on sub-Saharan Africa, mainly West Africa, because that's where the production is. And we know and we have very strong networks in most of those countries, having, as you said, spent the last 15 years and a lot of my personal time down in those countries. So our focus is across the whole region, not just Angola. However, what I would say is, with my experience to date of the enthusiasm in Angola to smaller investors and desire for us to get involved, and now that we started looking more clearly the opportunity sets that will come in Angola, I could see Angola being a significant portion of the company going forward. But we will end up being in a diverse number of countries in Africa.
And in the long term, it's to stay there and continue production, or do you see the sale of assets as a way to generate value for shareholders?
No, I think, you know, we would see the way we can generate assets. So that this asset that we bought, the Block 305 in Angola, the gross production today is about 20,000 barrels a day. Despite it being on stream for decades, we see the opportunity to invest in that asset. And the production, we see the potential to take that production to 30,000 barrels a day. Now, Sonangol are the operator. Our first task is getting in and working with Sonangol, the operator, and seeing what we can do to assist, bringing our experience to get that production up and increase it. And you know, if we achieve that, that's what creates the value for shareholders. As I said at the beginning, it's kind of us. We saw this opportunity, and then you say, well, to deliver the opportunity, what's our proposition? And our proposition is a team who have strong networks in the region, strong experience of working in the region, and you know, a lot of industry experience as well. So it's really about bringing that to bear, acquiring the assets, and then making the assets deliver greater value and greater resources.
You've spoken a little bit about the way in which you see this transition happen and Afentra's part in that. Yeah. What about the bigger, wider picture for the oil markets? We have to acknowledge at the moment that the markets are very tight because of what's been happening in Ukraine and the West's attitude, particularly to what had previously been a lot of oil coming onto the market, oil and gas from Russia. Which of course is now no longer wanted. To what degree do you see Africa being able to fill that void?
Yeah, well, I think Africa is a key exporter and has been for decades of oil and gas in the form of LNG. I think my kind of view on this macro position, you know, why did I've spent over 30 years in the industry and then had a bit of time out in 2020, and why did I get back in? You know, what I saw was an industry which had been heavily underinvested in. So for a commodity, that means there's going to be a challenge with supply. We had a kind of macro position globally where people, well, certainly in the developed world, were taking the view that we don't really need oil and gas anymore and we're going to quickly transition. And my view is, yes, there will be a transition, and this transition from a climate perspective is super important, but it's going to take a while, and it's going to take a lot longer than I think many commentators think. Therefore, this combination of underinvestment, the transition taking longer, therefore the demand being higher for longer, means that you have a crunch. And really, the terrible events of Ukraine, I don't believe they're the cause of what's happening. The cause of all they've done is brought forward something that was going to happen. That's kind of my view of the macro position. So, the geopolitics is causing a change of energy policy within Europe in terms of where the supply comes from, and absolutely Africa will be a key component.
Well, we've heard a lot about the green lobby trying to encourage and in some cases force companies to stop investing in new pipeline. And of course this is one of the reasons, as you explained, why the price has gone up. How do you see the relationship between the green lobby and companies working now? Clearly, going back to COP26, everybody had these wonderful aspirations of getting rid of fossil fuels and going green as much as they possibly can. Here we are now, clearly nowhere near that. And you nodded to that anyway. How do you see the relationship developing? Is it more difficult now than it was 10, 20 years ago to get oil out of the ground because of the green lobby? Are you having to do things very differently? And of course the big question is it costing us shareholders? I'm not a shareholder in Afentra, but I am in the oil industry. Is it costing us more money because we have to do it in a way that satisfies the environmentalists?
Well, again, going back to the kind of founding principles of Afentra, we saw the need for hydrocarbons in the longer term.
Yep.
We also saw the need for reducing emissions. And therefore, you put the two together and you say, well, whatever hydrocarbons we have will need to be produced. So therefore, we need to do them in a responsible manner. Now, I think the IOCs, the major oil and gas companies, I think are doing a good job. They are working very hard on emissions. The challenge is they sell assets. And what I think is very important is the companies that they sell assets to are as equally responsible in their way they run the assets about reporting emissions. And that really is one of the foundations of Afentra. We want to basically be part of this energy transition as a very responsible player to allow hydrocarbons to continue to be produced, but in a very responsible manner. I think the other point of Afentra is really this was focused on Africa at the time, where we said, well, it's fine for us sitting here in the developed world in the West talking about climate. And what we forget is the social context. We want to shut down oil and gas, so we're telling other countries you can't produce your oil and gas. Well, these countries have social challenges, and actually oil and gas is their economy. So they do have to transition, but you have to think of the social impact of this energy transition as well as the climatic one. And our view was we need to try and find a balance between the two. And this was the agenda we wrote last year for Africa. If you take that agenda, and we've had it here today, it's as relevant in Europe, where we have energy security issues. We have households that can't afford energy. I mean, we look at the papers in the last few days, energy bills are going up. And actually I look at our founding principles and they're almost relevant for Europe today.
Yeah. One final question, what's in your in tray? Clearly you've got a lot going on, not least of which is a continuation of trying to commit to your initial aspirations to deliver shareholder value. What do you see as the most important part of your job from here to get to where you need to be?
Well, I think as I was saying on Wednesday when I presented the admission document, three key messages. The first message is we set out a clear strategy and we're delivering against that strategy and we stay focused on it. We've done these deals, we need to get them completed, but that's a short term. And then the longer term is about the next set of deals. So right now we're busy, we're not just busy on Angolan deals, we're very busy looking at a number of other deals that are out there. And really we want to bring them to fruition. That's what's going to provide long-term shareholder growth, is actually this series of accretive deals, as we've seen cause the impact to the share price in the last couple of days.
Well, congratulations on the readmission. It's an interesting story. Thanks indeed for joining us.
Thank you.
Paul, it's a pleasure. Paul McDade is the Chief Executive of Afentra, the company that's just been readmitted to the AIM market here in London. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.